Yo, alright, quick recap. Two recaps. One from one from last night, one from right now. So last night I literally top tick entried the whole London. Right here. I entered to the tick, I'm pretty sure. 0.25. I had a 2-point stop, and I was targeting Asia lows. Ideally, I had my TP set all the way down to yesterday's lows. Down here, the triple lows. That was 200 points, but that was just like, gamble. But I had an alert thing set right at Asia lows, so I was sleeping during this trade. So if it went here, it would wake me up, and I check on how prices, and we tapped it, and I saw this rejection. I woke up like around right here, and I saw this rejection. And I closed like right around here, just to prove that I'm not bullshitting. I think I have some screenshots. Right here, not paper, top tick, 888.25. The line where the top is 888.25. Top tick to the tick, 0 drawdown. Beautiful. So if I closed around here, 90 points. How much R is it? 45R. You can't beat me. I'm the best. And that was because of a standard deviation at this chop right here. The -4. 888.25. You just need to know how to anchor it and shit. -2 and 215 got railed. However, -1 and -1.5 caused all of this chop as well. So, and also, my buys for the whole day was literally just like, look at this expansion we had the whole day yesterday. It's massive, bro. So I looked, and then 0.5 was a little bit under this, so we just tapped into premium. This 0.5 right here. So we're right above it in the middle of 0.62. So this was a good range to give a retracement. I kind of gamble on the fact that maybe we would dump because the last few London sessions have been like that. This was during London. Well, I entered right at the end of Asia, but I hope that London volatility would bring it down, straight down. But it didn't, so I closed. Anyways, going back to today. So top-down analysis, but first of all, I still had this range marked from low to high, the white lines. We ended up coming up and tapping 0.62 after London. And with a range as big as this, I expect every single OTE to be tapped, unless it's like during New York, But 0.7, I just got respected really well. Okay, so top-down analysis. At the time of market open, this 4-hour candle was around right here. We did not have the wick to the upside. And down to the 1 hour, I think price was right here before market open. So we had this order block, and we had this one. We had this 4-hour rejection block right here, CE. I'm just marked the CE that aligns with a BPR right here. So there's just a lot of like shit in this whole range, but it's not precise. So I didn't take anything off of that. And then going back to our range, the highs was right here, I'm pretty sure at that time. So if we mark the fib right here, 0.5 here, we don't need that. 0.62, not really anything significant. Have a little fair value gap, and then resting liquidity right here, not bad. So I had that on the charts, I watched it. 0.75 and 0.705, nothing really here, so I delete that. So mainly watching these two levels and see if any other PDRA is formed. 0.62 got railed through, as you see, this big ass Drake candle, so delete that. So mainly just watching 0.779, and we also have the thing right here. And let me mark it open for you guys. Mark it open right here. So right before, if we scale down, I have a nice power of 3 right here. This is accumulation, and manipulation, and then distribution up. So in order to find the manipulation lows, you can mark the last leg of the accumulation, which would have been this, because this whole range right here, this shit is accumulation, right? And once we have this leg down and we broke through the lows of the accumulation, which is here with this candle, this would be marked out as accumulation, and this would be the manipulation or continuing current manipulation leg. Doesn't have to close yet. Hold on, I'm hella sick right now. Alright, so once we have this established as accumulation and this as manipulation, even though price is still going right here, you can probably already tell at like probably this point, because market is open and we're very bearish, which is what I expected, because I am bearish today because of the NWAG up there. NWAG over here, it's Tuesday, so this was 2 days ago. We tapped into it very briefly yesterday and we had a huge reaction, and it is not filled yet, so I'm looking for this to get filled. Anyways, so right, identify accumulation, manipulation. Once we have manipulation, we lock in that this is accumulation. We mark the last leg of the accumulation, which is this, the last upward leg in the accumulation before we start heading downwards, which is the manipulation. And so we mark this -2. Doesn't really align with anything. Yeah, not really anything. And then -2.5. Oh, this whole range, standard deviation is just a range, right? So basically that pretty much overlaps with the OTE and the order block. So moving this over, this middle part overlap would be like the golden spot, golden pocket. So now we can delete those because those are just ranges, but this OT is a specific level, so it hones down to a specific target that we can look at. However, this is a pretty big stop once price comes down, and plus market just opens, so I wouldn't really market open this. Limit order this, given that standard deviation isn't too clean, like it's not exactly overlapping with other PDRAs, and my confluences are just a range and not a specific level, so I don't want to get fucked by spreads or whatever. So watching this on the 1 minute and the 15-second, first came down, tapped into it, rejected, good, rejection block, came back up, came back down, finally tapped 0.25, disrespected the reduction block, which is not that good. So theoretically, once in a blue moon, if you took this at the CE, you would have got stopped, but I don't think for a lot. 6 points stop. And then see this, you would have came back down and then got raped by this candle, but then again we come back and we close above. Just use this line, use our 0.79 as a reference point. Every single candle we close back above. Even though we came down and raped it, we still came back out. We pull out. And NQ is good at pulling out. That's our conclusion. So we rape, we pull back up. We rape, we pull back up. Once we form the small candle, if you have enough market experience, you can tell that when we have this stuff after tapping into a level and we form the small candle, we are ready for takeoff. So on the lower time frame of the seconds, I just entered in the middle of this small candle, and then mark the quadrants, and stop was at here. Still a bigger stop, but it's confirmed. Unlike this, it's just hope and prayers, praying that my level gets respected, and which it got raped through. But now we tapped into it. We show that we're all closing above, so we are respecting the level for one, and two, this candle formation means it's like a confirmation basically. So that confirmation was enough for me, and I entered. And then standard deviation. I had targeted -2. $6R literally basically went break even, like at this point. Literally, these are 1 minute candles, so one breaking even after 40 seconds, and insta TP. Yeah, basically that's it. Cause okay, overview. 1, top down analysis. I'm bullish because of the NWAG. 2, since I had a short here and I saw that we are ranging in this area and we didn't go straight down to tap this, that improved my bias for bullish today. And 3, once market open, I see, sorry. Okay. Before market open, we tap into the 0.62, this huge ass range that we're in, right? Before any move up, since I am bullish, right, I want a move up. Before every big move, before the real move, there's always manipulation. So I want to see bearish momentum before market opens, because I anticipate the big move up to my point of interest, which is longs until NWAG, to happen after New York, because there's more volume. So I'm looking for a bearish move down so I can enter longs. So we have that. So directional bias is made, and then before market open, topped this, the 0.62 with the huge range. So, and we respected it. So that's good for me because that's bearish momentum, and it's respecting bearish order flow. And then right before market opened, or right after, we do this. So confirm this is accumulation, able to mark the standard deviation, have this level, have the OTE level stacked on top of each other, good move down, looking for a move up. This classic AMD, accumulation, manipulation, distribution. Accumulation. Let me clear the charts. We have accumulation. Manipulation down. And ultimately distribution upwards. Currently it's just here, but I do want it to go to the analog. At least fill it. So like that. That's what I hope to see for today. Yep. We're going back up now. That was just a retrace. So AMD, accumulation, manipulation, distribution. Pretty textbook. Okay, bye.